there's one single intervention that can do this. But yes, you are right to talk about regulators. They are the main drivers of change, so to speak. If the regulators are receptive to new ideas, they will obviously be able to have regulations in place that are conducive to new products, new delivery channels, new ways of doing things. But obviously, behind the regulators, you have the policymakers, because the regulators really implement the law that has been put into place by the policymakers and the legislators. And so, but sometimes the regulators can influence how existing laws can be adapted to new ways of doing things. For example, in insurance, microinsurance is relatively new, and so regulators have been struggling to have appropriate laws that can regulate the microinsurance industry. Of course, other things, things in the sector regarding access to insurance services is the consumers of the product. In many cases, and that's one of the things we were talking about here, they don't have awareness, they don't have trust in the product, they are not comfortable with the product. And probably in most cases the product does not meet their needs, does not meet their preferences as consumers, and does not meet their capacity to pay, because it is such an expensive product. Of course, the other players are the private sector suppliers of the financial services, the insurance companies. They need to have appropriate services, products that meet those three things I talked about: the needs, preferences, and capacities of clients when it comes to consumers. It's not actually school education, because school education does not meet that gap of trust awareness. But when we talk about consumer education, maybe we also mean financial literacy, the ability to understand the product, what it can do, and to decide whether you want to use that product or use another one. And so earlier on, the conference was also mentioning financial inclusion. Financial inclusion means having access to the products, but those products must be of quality. Those products must be able to meet the need of the customer. I mean, if they gave you a hamburger made of some meat that you don't like, you will not buy the hamburger. Yeah. And if they insisted that this is the hamburger we have, you walk away. You have a choice. You have made a decision. In financial services, we should have the same ability, that a product is brought to us and we can say, no, that's not what I want. I want this other product from this other provider. And so that education, consumer education, which we no longer use the word consumer education or customer education, we now use financial literacy, but it's really financial capability. It's that ability of the client to make more than just that decision, but also the ability to plan ahead, the ability to know that I can borrow or I can save until I can purchase this item. There is even financial illiteracy, even in high-income individuals. So it's not just a problem of low-income people.
Okay.
Yeah.